Hey, welcome everybody to another Facebook, YouTube Live about building wealth, protecting it, saving money, and better living your American dream. Now, before you click on, maybe scroll past this, this would be a great video to share with someone you know that owns a small business or has investment property and may even be a CPA or an attorney. That's right. I can even treat professionals in a professional way, I guess you should say, and teach them something. And I hope anybody out there that's a CPA or attorney, tax preparer, financial advisor, that I share something today that's going to help you in a big way. I myself am a CPA and an attorney, partner in a law firm, an accounting firm, helping clients all over the country better live their American dream, save taxes, build wealth, yada, yada, yada. So I hope today to also give away a free book as a raffle item. I want to also give you a tip on how to write off your Halloween candy. What? Yeah, I know that sounds crazy, but we'll go for it. So anyway, hopefully you're going to find some help here with your travel deductions. We're hit a little bit of meals, a little bit of auto, entertainment. This is the time of year where everybody's going to be making some plans for their holidays. So if you own a small business, have real estate, trying to start a small business, maybe even a big business, let's talk about ways to save taxes this holiday season traveling. Now, we're going to do some Q&A as well. This is live, so down below, please type up your questions. Even if they're not travel related, I'll do my best to answer them quickly and efficiently, and we'll see what we can do today. And thank you so much for being here. I just love this time. I'm very passionate about this topic, and I try to make it a little funny, geeky, or whatever. I'm a nerd, so thanks for your patience. All right, so travel deductions. Now, first concept here. We can't just write off travel to go see grandma at Christmas time, and that's not legit unless we have a small business. So the small business is where we want to be. If any of you have a side gig, then there's an opportunity, and that's what we want to talk about. So again, one of the biggest tax strategies in America, one of the best wealth building strategies in America is to have something on the side. I'm not saying quit your day job, start a small business with a lot of risk. Start something on the side, something you're passionate about, something you love, and then we could take a tax write-off. Number two, so number one is have a small business. Number two, travel write-offs are 100%. That's right, 100%. Dining is 50%. There's very, very few limited options to write off 100% of dining. It's usually going to be in a company scenario with employees in a team building event, company party, something like that. You might get 100% for the dining. Also, if you're a restaurant, obviously food is going to be a cost of goods sold, or if you're doing an open house as a realtor, we're going to write off that food 100%. It's part of a service or a dining event or something like that for your customers. But for you, the business owner, I can only write off 50% when even you're traveling. That's right, you could have an important business meeting, or you're going to be eating while on the road doing business. Then we can do 50%. But dining is something completely different, and that's going to be 50%. So I'm going to put this on a box off to the side. Dining doesn't have anything to do with travel. Now, if I was in a live workshop, I'd be asking you, what are some travel expenses? Well, let's just brainstorm here for a quick minute. And I know some of you that are, again, professionals in tax preparation or tax services or legal services, you may think this is a little basic, but I always sometimes hit a hot button here. You're like, hey, I didn't think about that. So let's just talk about it. Hotel, airfare, how about rental cars and rental car gas? A lot of times I even forget that one. So I'll use my business card for the gas on the rental car, even though I may be doing mileage on my own car. So this is where I can boost an extra write-off on gas for my rental car. You may use Uber. You may do an Airbnb. Let's think of tolls and even valet. And when you're traveling, you can write off dry cleaning for your business clothing while you're traveling for business. I like that one. That's a fun one. Not a lot of people think about that. Now, I can't write off dry cleaning on a regular basis, but only when I'm traveling. Sometimes when I'm traveling to New York, because there's a dry cleaner on every corner, I'll throw in a dirty suit in my suitcase, and my wife's like, what are you doing? I'm like, I'm going to New York. I'm just going to write off my dry cleaning. I'm a geek. I like to find any write-off I can. Speaking of that Halloween candy, hold tight. So anyway, these are just good ideas of how to write off travel expenses 100%. Now, I'll come to the days and how many days you're traveling in just a moment. And let me tell you one that a lot of people ask questions on, so don't even bring it up. Can I write off my speeding tickets? I hate Arizona for this. The cameras, you know, so I'm traveling on business, blazing down the road. Where here it's 85 in Idaho. Montana, just my next door neighbor, there's no speed limit on most roads. It's crazy. So I go to Arizona and a camera pops me. I get a ticket in the mail. Is that a write-off? Even though I was traveling for business? No. Fines and penalties are not a write-off. So the parking is a write-off, valet, tolls, all good, but not the speeding ticket. Sorry. Now let's think of reasons why this could be a write-off. I've got 5 of them for you. Some of you that have been in my workshop, this might ring a bell, and I want you to be able to rattle these off at any dinner party this season. You're gonna be the talk around the eggnog jar. You know, when you're drinking there, you're gonna say, "Oh my gosh, let me tell you the coolest tax tip from Mark Kohler." See what I'm saying? I got your back. All right. Number 1, maybe you're gonna go meet a customer, a client. And I even was talking to a plastic surgeon of mine out of Orange County the other day, and I said, "Oh, you're gonna be in Utah for some of the holidays. Is there a prior patient you might be following up with? Maybe a future patient you might be meeting with for a future surgery? Maybe you're gonna give a little lecture to a small group about medical something or another. I don't know. Try to think of a reason why you can meet with a customer, a client, or a patient while you're traveling. Number 2, think about a vendor or an affiliate. This would be someone you may be buying product from, or someone you might be doing an affiliate marketing thing on your website. Go shake some hands, cut a deal. I have a client out in Hawaii on Maui, and they're a contractor. And when they travel to Washington State to go see grandma, they'll go visit some of their vendors that they buy building products from. That's great. Now the trip's a write-off. We'll come to days in a minute. Number 3, why don't you have your annual board meeting? Oh, I love this. And this is where Thanksgiving, I'm not kidding. I'm not kidding. I know some of you people are like, I know, email me and go, "Mark, you can't be serious." No. On Thanksgiving, after the turkey dinner, and when we're pulling out the Risk or the Life or the different games that will start a fight and ultimately everybody will go home mad. But before that, we'll have our family business board meeting. And we'll talk about the real estate. And now we've got a board meeting for the family. Literally legit. We get some of the kids that are older to listen in, and we talk about the plans for the real estate. Now that means the turkey dinner was a business meal write-off. Now my mom hates to cook, so everything is at Costco. So we'll take the business card the day before down to Costco, buy everything we possibly can that's easy to cook, bring it back, mom's happy, and it's a write-off because we're having our board meeting. So this is a great time to talk business with your family, who should be on your board of advisors for your LLC or board of directors for your corporation. Have your annual minutes. In our company maintenance program for all of our clients, for LLCs or corporations, we charge $150 to do your minutes with 25 questions that you can cover in your meeting. Talk to Becky Lloyd at my office. Just call up the law firm, information down below on the law firm and accounting firm. Call Becky up and go, "I want to be on the program. Give me the list." So that's your board meeting. The next one I love is visit a rental property. Where are you buying your rental properties? Where are your kids going to college? Where does mom and dad live? Where does your brother live? Where's your favorite football team play? I had some clients that are like, "Mark, we go to Texas all the time." And I'm like, "Okay, you got kids going to college there? What's going on? Grandma in Texas? Why do you have rentals in Texas?" And they go, "We're Dallas Cowboy fans." I'm like, "Oh, those fans, they're crazy." But anyway, Prescott's a stud, so I'll give him some kudos there. But anyway, where do you go? Where do you go to play? Maybe you could buy a rental property where you enjoy going. So visit rental. Many of you have heard I've talked about buying rentals next to my in-laws for years, and I love it. Why not get a write-off when you got to go see your mother-in-law? Hello. Okay, now number 5. Why not go to a conference? Go to a conference. Increase your training and education on your business. So many people want to go to a conference. It's like, we're going to make money and we're going to walk on fire and we're going to do all this crazy stuff and woo, rah, rah, rah. Why not go to a conference where you learn how to run your bookkeeping, save taxes, your legal structure? Oh yeah, a Mark Kohler conference. I've got one next week in Philadelphia. We only have 14 seats left. Go check it out on my website. $200, and I include lunch. I want to make my workshops affordable for clients, and you get a recording of the workshop. I still have Honolulu left and Orange County. And I do workshops throughout the year. Matt Sorensen, my partner, we do an IRA workshop every spring to talk about self-directing your retirement plans. Travel to some of these things. Plan your travel around a conference. Now be careful of cruises. Cruises are hard to write off. But all-inclusives of Mexico, blah, blah, blah. Wonderful. So I'm going to put conference. Now, the last topic. Now, I know there's a bunch of the questions coming up here, and I'm here for you for another 20 minutes or so. I brought my Diet Mountain Dew. I'm ready to rock and roll. Also got a new Sharpie just for you. All right. Okay, now let's do 3 examples here. Let's say that you're going to travel for business on one day. So you go boom, boom. Tuesday, Wednesday, Thursday. Now here's how the travel write-off works. The day you travel is a write-off. The day you do business is a write-off. And the day you travel back is a write-off. So here's my meeting or checking on my rental, whatever I'm going to do. This is 100% write-off. Okay, pretty cool. Now, the next rule is, what happens if I travel over a weekend? Let me see if I can get my days here. Saturday. Okay, we'll do Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Oh, I need to add a little bit there. Okay, we'll see. Okay, so we've got Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Now, let's say you travel on a Friday. No. I like this better. I'm going to travel on Thursday, do business on Friday. Dang it, I get stuck in Vegas on Saturday and Sunday. Nothing to do. And then Monday, I do business again, legit. And then Tuesday, I travel back. Look at this, 100% write-off because I'm there for business. And the IRS is very clear with case law and rules that as long as I do legit business these 2 days. Now let's talk legit business. Again, one of those 5 things. And business, if it's not a strict meeting situation you had to be there, is 4 hours of work. So if you're going to go check on your rental property, meeting the landlord or the tenant might be a good one-day meeting, but what am I going to do the next day? Well, maybe you go over and do some cleanup, some painting, some inspecting, some videoing, get a drone, fly over your rental property, talk to the engineer or survey company. I don't know, but you want to find a business purpose for that. Now, the last example is, let's say you're gone for 10 days. I mean, we just got this extended trip and you're trying to write off Hawaii or the Cayman Islands, or maybe you're going to see grandma for 2 weeks around Thanksgiving, whatever. Well, let's say you're still going to do some business there. And so in this 10-day trip, let's say you do 3 days of business, but you also have your travel there, travel back. So we got +2 there. Oh, look at 5 days of business with travel and 10 days gone. Easy math. That's a 50% deduction on most of my travel. I still may write off 100% of your airfare because you had to get there for this business. But then hotel, because you don't want to stay at grandma's. You know, grandma, everything's expired in the fridge. It's not good. So you want to get out, go hit Cracker Barrel, but you want to go here and 50% of all of your other travel is going to be a write-off. So we're going to do what's called prorating, and you want to talk to your accountant about what level you should be there aggressive-wise. Now, last point. If your business is really mature and doing well, maybe you got a 50, 100, 150 grand of income and some reasonable expenses, hell, I can write off 5 or 10 grand in travel. But if you're just starting your business and you only had 3,000 in sales, I don't think I'm going to write off a trip to Hawaii for 5,000 bucks. Remember that your tax return needs to look legit and not over the top aggressive. And your accountant should talk to you about this and try to find the best balance. So there you go. There's travel. And I want to open this up for some questions. And one other comment. Auto. Let's say I drive to grandma's. I'm going to write off my auto. It is a typical auto expense, not travel. Now, if I stay at a hotel along the way, I've got travel. And then if I stop at Cracker Barrel along the way, I have dining. So see, you've got 3 pieces there. Auto for the mileage, or if you're going actual, watch my other videos on travel, on automobile and trucks and actual versus mileage. But let's say you have mileage, hotel is travel, and then meals along the way are dining. So that's going to end up on 3 lines on your books. But guys, here's my point. Some of you may think this is so boring, but it's not. A penny saved is a penny earned. Let's say I can write off 3 grand in travel, just 3 grand. We know we could do that in a given year. Well, if you're in a 30% bracket, let's say 25 Fed, 5 state, you just saved $1,000 in taxes. That's not chump change. This little video that you're watching right now could literally save you $1,000. Going out and making sales of $1,000 can be a lot harder sometimes. So this is the yin and the yang. And I'm preaching to the choir. If you're watching this, you're already sold on this. but share this video with someone that just thinks about making money and being disorganized. They need this stuff. You're going to save them. All right. Who we got? Richard?
Richard, can a corporation have earned income?
Whoa. Okay. Say that again.
Can a corporation have earned income?
Yes. Now, Richard, that's a broad question. Are you talking a C corporation or an S corporation? Usually earned income is a concept on a personal tax return that you use to see if you're eligible to make an IRA contribution or get a tax credit of some sort. Most corporations and most small business owners are going to be S corporations, as in small. Really what we're looking at is ordinary income. And then earned income is really a personal concept down here on your 1040. So I don't know what you're defining as earned and why you would ask that question. Maybe type it up again. And let me say this to everybody here. I want to give you my email address. I've got an amazing assistant, Maria Estrada. I started to say her last name before I finished the word assistant. My assistant is Maria Estrada. She's great, and she helps me with my email if I have a bad day with a bunch of email. But if we're not answering your question, or if you'd like a consultation, even for 20 minutes with one of our tax lawyers that could save you 10 times what you pay us, send me an email. We'll try and hook you up. See if maybe there's a book or a video or a little something we have education-wise that would be pennies on the dollar in what it would save you. You know, big stuff. So here's my email, mark@J.Kohler, and that's J as in Jolly. So Mark, M-A-R-K, at Mark, M-A-R-K, Kohler.com. And just say, hey, I need some help. I need a consult. Is there a good video you'd recommend? And I have a video series that's like $300 and 40 hours of content of just all sorts of tax and legal tips you'd love. Why go out to the movies this weekend? Get home, have a bowl of popcorn and some Diet Coke, and watch Mark Kohler. Woo! You know what I'm saying? What an awesome weekend. Some of you are thinking, what is in this Diet Mountain Dew? I don't know. It's probably the pen. It's a new pen. Okay, all right, Jack.
Jack said, when are you coming to Florida?
Okay, Jack. I was just in Florida 4 months ago for a little workshop, and I love coming to Florida. Hey, Jack, let me say this. You put 100 people in the room, call me if you can. Maybe we'll put together a little project. I usually like to speak to at least 100 people or more, or some people will just pay me to show up and speak to their group, and I try to be reasonable with that. I literally had a client pay me to come to their family reunion and teach their kids about finances. And it was a wonderful little meeting. And no one listens to their parents. And so this was money well spent by the parents to have me come teach financial literacy for 2 or 3 hours to all the family. So anyway, Jack, let's put something together. I don't know. We'll see what we can do. Okay, what do we got?
Johnny Miller, I submitted my S election to the IRS. It takes about 8 to 10 weeks to get an acceptance letter from them. Do I have to wait until I get the letter to start payroll, or can I do it now?
You can start now. Now, this is a really important point, everybody. Let's just step back for a minute. We have ordinary income and we have passive income. We're going to use LLCs for our rentals with rent, passive income, capital gain, royalties, Airbnb, all that stuff over here. What Johnny's talking about is he's going to graduate, and some of you already need it, and we have a really affordable service to get you into an S Corp with a legal consultation with a real lawyer. But Johnny's over here, and he's going to have an S Corp. Now, an S Corp is wonderful because you avoid self-employment tax. You only have to pay it on the salary portion. So Johnny is going to set up a W-2 for himself, and then everything else comes out the bottom as one might call a draw or pass-through income. Some call it a dividend just to kind of make sense of it. But it's the net income of the S Corp. The Corp pays no tax. It just flows through. So Johnny has to start a W-2. Now, Johnny, remember, you're not actually going to take a paycheck. You're going to do a payroll report 4 times out of the year, in April, July, October, and the end of the year in January, and kick out a W-2. So Johnny, if you're trying to do an actual paycheck for yourself, don't worry about that. Take the money, and then we'll do a payroll report quarterly. I'm not kidding. This will save you a lot of headache. Schedule a half hour. with one of my CPAs or one of my tax lawyers, and you want to talk to Deborah Stanton. Deborah Stanton in my accounting office. She does payroll with her team, about 3 to 4 accountants for payroll for clients all over the country. We charge $150 a quarter, and that's all you have to do. Don't worry about a paycheck, Johnny. So do a little research before you go down that path. But you can start payroll right away. You can freaking start taking money right away. Don't wait for the S election. You're good. Okay, what do we got, Carly?
Okay, Malcolm asked. Okay. He said, my wife is my board member and she needs to go to Australia in January for her W-2 job. I would like to join her for a few days prior to her work days and have a planning time for the growth of our S-Corp. I would like to deduct all my travel and all expenses her work does not cover. Anything I need to consider?
Geez, Malcolm. Anything else? World peace while you're at it? For crying out loud. What do you think? I'm like a magician up here? Okay, Malcolm, I love it. And I love actually phone calls like this. Let's rub our hands together for Malcolm and think of some ideas here. He's got to go to Australia anyway. His wife's going to go and probably her company's going to pay for her airfare. So what we're worried about is Malcolm's airfare. Now he's going to get down there and have a board meeting with his wife. Fine. I'm hoping his business is fairly substantial. So we're going to do one-day board meeting. That's cool. But what could Malcolm do to maybe get a better write-off for the whole trip? Go to a conference when you're down there. Start searching around. We actually use a consultant for our accounting and law firm, a consultant that's based out of Australia. They're called Panalytics. Pantalytics, I can never say it properly. But do a little bit of research, CPA or professional training, Panalytics. They're a training company based out of Sydney, Australia. They're great. But there's all sorts of trainers down there. And when your wife's doing work, you're going to go to some conferences, at least 4 hours a day. Why don't you go looking for real estate? Maybe you make an offer on real estate. Now, shopping for a rental is not a write-off. You got to make a legit offer. But the point is, let's find some reasons to not just have a board meeting for one day. Let's attend some training and let's go to go to look at some real estate and just get creative. So Malcolm, I'm open to the discussion. You want to meet with your accountant to make sure you don't freak them out when you come back. If your accountant's afraid of their own shadow, my ideas are going to shock them. So make sure you get your accountant on board with you before you go. But I like where you're headed, but you're going to need more than a board meeting to really write off a big chunk of that. Okay, Alex.
Alex asks, if I had a rental in another state, could I take my wife and kids and write off their travel as well? My children are young, 5, 3, 6 months.
Ooh, wow. Alex, you got me going there until you threw out all those ages. First of all, the answer is yes. Can we go check on the rental, maybe during the holidays, maybe there's family in the area, and you're going to travel over here to check on our little rental property. The LLC is going to be paying for the expenses. Now let's just think properly here. You say, well, my LLC doesn't have enough money. We'll put money in the LLC. Let it pay for the airfare, some of the expenses along the way, or whatever you're going to incur. I don't know if you're going to drive or fly and stay in a hotel or not, or whatever. There's also per diem deductions. So you get the greater of what you spend or the per diem. Whole other topic. I've got a blog article on this on my website regarding per diems. Check it out. But here's the point. Great write-offs for everything, including your spouse. And what you're going to do every day you're there is find a business activity. You're going to talk with your tenants, talk with your property manager. Maybe you're going to go supervise the pest control when they do their spraying. Maybe you'll do some tree trimming, some landscaping, go paint the garage. So you need to find a duty every day. Now, the 5-year-old, I'm interested. Maybe that 5-year-old's there chasing you around, picking up garbage and helping you with the weeding and some of the landscaping. I don't know about the 3 and the 6-month-old, so probably not a write-off. But let's think about this. This is good. Why would we want to pay the 5-year-old? Well, we get a write-off for it, and your 5-year-old doesn't pay tax, and they're still considered a dependent on your tax return. You still get the child tax credit. That's cool. So why am I going to pay this little 5-year-old, and maybe we can only pay him $500 for the time they helped out at the rental property? Well, what could that 5-year-old do with the $500? Sure, we could go pay for preschool, but no. We're going to go open a Roth IRA. because now your 5-year-old has earned income. This is back to that original question that Stephen, I think it was, had about earned income. This 5-year-old has earned income, can fund a Roth IRA, and your Roth could be a partner in your next LLC to buy real estate. What? So that's why we want to pay the kids, so we can start that snowball going down the hill, building wealth with a Roth IRA. But I don't think anything more than that would be too aggressive. So, but we're on the right track, right? I like what you're doing, Alex. Talk to your accountant. Carly.
Okay, Aisha said, I'm a travel agent and need to do research on properties. Can I write it off?
Isa is a travel agent doing research. Ooh. You know, the only other one that I've heard that's better than that is, I'm an author and I need to go to Paris, France to write my book so I could better concentrate. All right. Okay. Now, Isa, all is not lost. I'm open to this. The first thing I'm going to ask Isa is, tell me about your business. How much money have you made? Now, if Isa's like, I just started, I sold a cruise to my sister and made $300. All right. Not big enough to really justify any travel for yourself, Isa. But let's say that Isa's really hitting it hard. Let's say I don't know, male or female? Could you tell? Sorry, I'll just say female. Okay, good. So let's say Isa says, I'm going to go do a lot more travel marketing on my website. Maybe I even have a storefront. I do some booths at the county fair and at the farmer's market. And Isa's maybe making 50 to 100 grand in her travel business. All right. Now I'm really interested in seeing her take some write-offs to go on some of these trips, because she's going to go there and make connections with tour companies. She's going to go and line up housing and hotel deals specifically for her customers. She may even go to certain restaurants and negotiate some food cards or some punch cards that she can give to her travel agents. To her customers. Ooh, here's a good one. Maybe she puts together a tour guide, pamphlet or book. She goes, this is the way to go see Turkey. And she puts together an ebook of maybe 30 or 40 pages with a route to take. Here's a 3-day trip, a 5-day trip, a 7-day or 10-day. And she prints it. She could even publish it on Amazon quite easily. Now, Isa, we're talking. So if you're going to say, I'm going to go do research, there better be some byproduct of that research that you can show was sold or given to your customers. So I love it. I like it. But I'm going to ask some important questions, because if you're just starting out, it'll be too aggressive. Okay, home investor. I know this caller. He's been on here before.
Yeah, he says, hi, Mark. Thanks for helping out with my questions last week. He asked, can I deduct business use of car payment and business miles, or either or?
Okay, let's open the can on auto for a minute. Now, see, on this stuff, you may have an S corporation, like our friend said they're going to Australia to try to write off, or someone might have a rental property, like who it was that said they had kids and they're going to go check on rentals. Both of these are businesses. And if you have travel expenses, hotel, air, blah, 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 that's a travel write-off. But let's say we start driving, not only your daily auto use, but auto for a trip. Well, here's the deal. Auto, whether it's travel for a trip or auto driving around town, picking up supplies and meeting with customers, it's the same methodology and the same procedure. So here is the auto procedure. Now, this is where I want to encourage all of you. Get over to my YouTube channel. Type Kohler Auto, and you're going to see 3, 4, maybe even 5 killer videos just on the auto expense deduction. And give them a like and hit the bell. Every time I shoot a new video, you get it. So I've got content out there. This is a chapter in my book, The Tax and Legal Playbook. This is a section of what your CPAs are telling you, and I'm going to raffle this off today. If you share this video first thing in the morning, Rosalie's going to go through and look at all the shares. She's going to choose the name she likes the most and then send them a book. Oh no, you do a raffle? Okay, Rosalie says I don't do that. She's really quite honest, but she does accept payment. If you want to write your address on a $10 bill and send it to her, you might have a better chance of winning. Did I say that out loud? Okay, sorry. Okay, but anyway, here's our winner from last week, by the way. Jason Lerma won the Financial Freedom book. So it's legit. There's a real person out there that got a book from last week. So share the video and Rosalie will take care of you. Auto. This is good for everybody. Everybody should be taking the write-off for auto. No ifs, ands, or buts. I don't care if in your basement selling jeans on freaking eBay in your underwear. You're going to drive somewhere to buy more jeans to sell. You're going to go down to the post office. That means you get an auto deduction. Okay? So you have two options. You can do mileage or actual. Now, if you're going to go actual, you have to be able to show that you use your car more than 50% business. If you don't even use your car 50% business because you've got a lot of personal miles and commuting and just crap driving around, then and the business doesn't tip the scale to 50%, actual is not going to be an option. Mileage is going to be your best bet. I'd probably say 60 to 70% of our clients go with mileage, and this year is 58 cents a mile. Great deduction. Track your mileage, keep the best written log you can. There's some great apps out there where you can, I've even got an app, you'll see a link on it every week on my newsletter, but you can get an app to track your mileage with a GPS. That's cool. But mileage is pretty slick. But once you choose mileage for that car, you're stuck with mileage. Now you may have 3 cars and you may say, well, I'll do mileage on this car, actual on the other, and the other one's for commuting for my day job. I'm cool with that. So talk to your accountant. Oh, the best place to go, I'm not kidding, is markjkohler.com. markjkohler.com. In the blog, type auto. This year, I produced an article with a video in January under the new tax law that gives you 7 options on how you may want to write off your car. It's free. Get over to there, markjkohler.com, and type auto in the blog section. Great article. Share it with your friends. Share it with anybody you know that has a business, and they'll love it. Even CPAs tell me, Mark, that was a great way you put it. So I'm really trying to be professional here for the other professionals to help them out as well too. All right, who's next? Carly. How come you get all the unique names? Is this Jose or Josie or Jose? Or?
I'm going to say Jose.
Jose.
Yeah.
Okay, Jose.
Hi, can I write off business expenses payments made by personal credit card, not business? I have an LLC. Thanks.
Okay, and by the way, this reminds me, back on the last question, what was their name? On the auto? It was a home investor. He asked about their car payment, and I forgot to say this. This kind of relates to the credit card. When you make your car payment, no matter what method, that's not a write-off. You're paying off a loan. So the mileage is a write-off, or your actual expenses, which would include depreciation of the car. But your actual car payment's not a write-off. Again, read my article and Home Investor. I think that'll really be helpful. But this kind of relates to Joe's question. Joe's has an LLC. All right, cool. Let's go back a paper here. So Joe's has an LLC. Maybe Joe's owns a rental property. Maybe Joe's is an LLC selling product waiting to make the S election. We don't know. So Joe's could be ordinary or passive with their LLC. But Joe says, I use a credit card. I want to build points. I want to build points to cash in for personal travel and take some sweet trips. That's cool. So he's got a credit card and he says, can I write off the payments to the credit card? No. What you're going to do is do a report of what the credit card was used for. And when you do your accounting, you're going to write off the expenses from the credit card and put them in the proper categories. So the answer is yes, you get to write off the credit card payment, but I have to break the credit card payment down into its pieces and parts. Now, this is 101 for any accountant out there. But for business owners, it kind of gets, they're freaked out. I used a credit card and my business paid the credit card expense. So what you would want to do is, here's what I do. At the end of the year, I print out all my credit card statements for the year. And then I go through with a highlighter and I indicate what the expenses are for. So I let my business pay the credit card bill, but at the end of the year, I allocate the credit card payments to the right expense category. So I'm going to say, Joe's, make sure you talk to your accountant or whoever's doing your bookkeeping. And many of you out there, you can get a part-time bookkeeper from a local college that needs to learn about QuickBooks. And you can sometimes get an intern or get someone very affordable that needs to cut their teeth on QuickBooks, and it can save you some money and you can learn more about QuickBooks. All right, who we got? This is the last question, I'm told. Now I've got, again, don't forget, my Halloween tip is coming up. So don't go anywhere. Last question.
Yep. This is from DSHC Enterprises.
Okay.
Says, Devin Munns did our S election. He asked, can I write off use of my relative's house in New Jersey as a meeting expense when I visit?
Okay. First, Devin Munns is one of the attorneys in our office. He's a stud, and we've got 5 great attorneys, and so Devin's one of them. And if any of you need a little hour, Devin's cheaper than me, and he's great, so schedule away. Give him a call. You can call Rosalie, and she'll schedule you. So let's think about this. DSHC is going to New Jersey to visit the in-laws. Sorry. And then he's going to be there and have a business meeting. And he wants to write off their house. Okay, so far, I'm still in the game here. I haven't ran off the field. So first, I want to know, did you pay them? Did you pay them to use the house? Probably not. And see, this is an important point, people. If you don't have an out-of-pocket expense, what am I supposed to write off? So DSHC, whatever. DSHC. You know, next time just throw in the word Tom, that'd be helpful. But okay, DHC. When you go to New Jersey, and this is good for everybody out there, look at the per diem expense. Now let me explain what that means. If you go to, it's gsa.gov, gsa.gov. There's a government website that has established what the average expense is for a median hotel expense across the country by city. Now you can go to Google and just type in per diems 2019, okay? Once you get to that site, you're gonna see per diems for meals and per diems for travel. Now you're gonna love this, DSHC. What you're gonna wanna do is go to that report and you're gonna look at New Jersey and the closest city. And it's gonna tell you what the average hotel expense is for every night staying in New Jersey. So that becomes your write-off. You're gonna say, I spent 4 nights in New Jersey and I didn't have to pay for a hotel, but I get to be reimbursed for staying with my in-laws. Now I know it's probably worth more than the per diem because staying with in-laws sucks, but you just get to take the per diem. So you're gonna look at that number. Now some of you are like, what? This doesn't make sense. Let me use another example. The average lunch in New Jersey is gonna be on that report, and you're gonna go, okay, the average lunch is $22.50, let's say. Well, it's rounded to the average dollar. So let's say it's $22. Well, you're cheap, like me, and you say, I'm gonna just go to 7-Eleven and get a chili dog and some nachos, and I'm gonna spend $3.22. Okay, what's your write-off? You get to choose the per diem or what you actually spent on lunch, whichever's greater. So if the meal expense in per diem is $22, that's what you take. The same applies for hotel. I'm gonna sleep on a crappy fold-out couch bed on my in-laws, and I didn't pay anything for it, but the per diem might be $110 for that night. So you get to take the $110 to make up for that crappy sleep. That's the write-off. So that's what you get to do. Now, what are we missing in this whole equation? I need DHSC to sell me on the fact he's doing freaking business every day there, right? So are you checking on rentals? Are you meeting with customers? Are you meeting with vendors? You get your board meeting done one day, cool. But in order to take the per diem per day, you gotta be sure you're doing business per day. Well, anyway, fun stuff. I hope you enjoy it. Now we're gonna raffle off the book, What Your CPA Isn't Telling You. Now this is a story. I love it because it gets you into the topic of taxation and I trick you. It's just kind of fun. And I'd like to, I'm gonna just read you one, check this out. This is my tax book. None of you wanna read a tax book, I get it. Check this out. It was a dreary day in March. You know the type of day. It was cold. The flowers had yet not started to bloom. One didn't know if it was about to rain, snow, or just stay cloudy and bleak. I mean, this is like Pulitzer Prize here. What made the day even more unbearable was it was the day we went to see our accountant. It wasn't a meeting we looked forward to. Sometimes we just talk over the phone or simply drop off paperwork. Today, however, we were to meet. And you can't put it down. You just want to keep reading. And I trick you into learning about taxes. It's a page turner, I'm telling you. And I want it to be a made-for-TV movie, so I worked in a little sex scene. When you find out Viagra's tax deductible, woo! Yeah, it's really PG. Everybody always asks, Mark, I missed that sex scene. Well, it's subtle. It's really subtle. So you gotta just pay attention. You'll miss it. Anyway, so thanks for letting me have fun with you. It's miserable learning this crap, right? But hopefully you enjoy it. I've got great videos on my website where I ham up as many videos as I can, but teach real content you can rely on. If we file your tax return and we give you advice and it's wrong, we pay the penalties. And we're a legit accounting. I got KPMG experience. My partners are Arthur, Deloitte. We've got legit partners in my accounting firm helping clients all over the country. So please take confidence in what I'm saying, even though I sound like a dork. So it's really good stuff. Now, your Halloween deduction. Now, my wife let me only do this once with the kids because I embarrassed her and all the neighbors thought it was funny, but it didn't go too well. What you do is when you go buy all the Halloween candy, you take out a little string and a business card and hole punch it, and you put your business card on every piece of candy. It's great. All the kids are like, what's this? And I go, just give it to your mom and dad. And so I handed all this candy out with my business card, and the neighbors were like, it's Mark trying to get a write-off. But I did. It was advertisement. I loved it. Now, if you could really print your name on some of that candy, how cool would that be? Well, my wife was, again, only good for that for 1 year. But that's, my friend, is how you get some good marketing and a tax write-off for your Halloween candy. So anyway, have a fun week. We'll see if we're going to do this live. Next Thursday is Halloween, so we might do this broadcast on Wednesday. Get the newsletter. When you get over to markjkohler.com or the KKOS Lawyers or any of our websites, if you sign up for the newsletter, there's a posting every week of what the podcast is about, some extra videos, really good stuff. So check it out. And let me see, any other announcements? Oh, Philadelphia is next week, November 2nd, and the day after is a home football game in Philly. So you might take a tax write-off coming to Philly. Could be a good fit. Hawaii is November 23rd or 2nd. I can't remember. That weekend right before Thanksgiving. And then we're going to be in Orange County on December 7th. So get over to the social media, give me a like, share this video. And I just want to say thanks. I just love this stuff. And I want to encourage you, don't give up. It's hard. And I know the grass always seems greener somewhere else. Success is a slow process. It's just doing the right things every day, just a little at a time, and you'll get there. Hang in there.